Welcome everyone, and thank you for joining our Google Grow with Google webinar series. Today we're going to be discussing how to make your small business more accessible and also just share some tips, some ideas on how you can invest. So these are the two items we have for today. So we go right into it. I like to start with this video. Saigon.
I'm what's called a coda. My parents were both born deaf. I was not. When people in the hearing world learn that about me, they always want to know more.
You start out, you can go ahead and then go out with your hand.
I've always had one foot in the deaf world and one in the hearing world. I translated a lot for my parents. It made us closer. Now that it's been over a year since we've seen each other in person, communication is more important than ever. Especially with this kind. It's their first time being grandparents, so they don't want to miss a single moment. And I don't either. We can't wait for you to meet him.
So you saw in that short video, that was someone who said he's a coda. Coda meaning child of deaf parents. Both his parents were deaf. And these are the realities many people have today. People have various handicaps, and we need to see when you have a business, how you can make your products accessible to everyone and have empathy for people who are in this kind of situation. So again, my name is Paul. I could put on my video for a second and put it off, not to be distracted. So I'll put it off and we just concentrate on the slides. So welcome again, everyone. And this is what we're going to look at today. We'll try to define accessibility, and we'll talk about best practices for your business, for designing your business. We'll talk about email accessibility, physical accessibility, which should be inclusive, and we'll round up with investment basics. So we had always said, because we had done a survey and we said, what are the topics people were interested in? And people talked about various items like relationships, like money. So that's why we bring these supplementary topics. So to understand accessibility, we first need to understand that challenges that people with disability often face in their daily lives. Some disabilities are visible, others are not immediately apparent. But someone with any type of impairment may encounter barriers to completing certain tasks or activities. So accessibility ensures that people with disabilities can perceive, understand, navigate, and interact with our products. This is very important. Often this is done with the help of assistive technologies, which can help overcome these barriers. Now, these are some statistics. Although these stats are perhaps over 10 years ago, but it still gives us an idea that according to WHO, about 15 of the world's population have some kind of disability. In fact, some of us have it temporarily. I recall while I was jumping with my children on the trampoline, I sprained my knees, my meniscus, and I couldn't walk for about 2 months. I was using crutches. So even if I'm not consistently handicapped, I could be temporarily handicapped. So this is a reality. that we anyone can go through. The stats also says one in about 25% of Americans have some kind of disability. And these people, from the business perspective, Google is saying that they have a lot of spending power. That someone has disability doesn't mean he doesn't want to spend, doesn't mean he doesn't want to engage. And this spending power is estimated to be about 6 trillion US dollars. So we need to develop content for accessibility. Building for accessibility means producing digital content that people with disabilities can perceive, understand, navigate, and they can interact with. It's about designing your business communication, your products, physical space in ways to allow people with disabilities to engage with them. Because people can't buy your products and services if they don't understand them or they can't engage with them. So building accessibility is good for businesses because it's going to help you to expand your market. It will improve your experience. And especially in developed countries, there are a lot of laws regarding disability. And if your businesses are compliant, it will help you avoid any legal risk that you may face. So you can see, for instance, Google um, has things that could help people. Like, so this is Google Drive, for instance. I know most of us are used to Google Drive. So let me just open a document here, a new Google document. That's just a plain document. So you can see here, Google is considering accessibility. If you come here, you go to tools, you can see accessibility. You can have a voice reader. If you have used this with a an extension, you could the screen can actually be reading for somebody who is blind. But let's see for somebody who cannot maybe write. So this is a voice typing. And this is not only Google, I believe if you are using Microsoft Office, it's basically the same principle or most uh, word processing documents. So if I come here and I open this, I can speak. So hello, you can see that I'm speaking to us, and you can see that computer is typing what I am saying. So this is an easy way that people with difficulty, let me continue. So this is an easy way that people with difficulty in writing can still type. So you can, okay, I think it's okay now. Let me stop it. So you can see that I was able to just do that without writing. So this is Google doing its business so that people who cannot write, they can you can use Google Docs to write. And it's not only Google Docs, even if I come, it's the same thing here. If I had opened Google Slides, you could still see under tools, you can still see dictate speaker notes. So I can still the same thing, I can speak here and you can see it will write what I say. So you can see this, I could dictate the notes. The same thing. So that's how you're creating a business where people who have difficulties in handicap, they're being considered. Okay, so let's go back to the slides. So let's talk about universal designs. There are so many ways we can do to make existing digital content more accessible. Um, we'll take a close look at universal design. So universal design means designing for everyone, whether they have disabilities or not. So whether the people have any form of disability or not, they can use your system. So let's take a look at some of the elements for universal design, techniques that can help you communicate clearly. Now we'll look at all very quickly, all 7 of them. Your images, your alt text, colors, design techniques, text formatting and headers, text links, and video captioning. So if we come here, how would you describe this image? If I ask anyone here, how would you describe this image? Could somebody help us with that? Anyone, please. What would you say this image is? Anyone? No, no right or wrong answer. Just could anybody help us? How would you describe this image? Hassan, can you help us? How will you describe this image?
You can see a cup
Okay,
uh, with some tea.
very good.
Yeah, yeah, it's a cup of tea. It's a symbolize of hospitality.
Thank you very much. So, Babu, thanks for that, Pastor
Yeah,
Babu.
thank you,
So,
sir.
thank you for for standing out. So, cup of tea, hospitality. So, a computer and a screen reader cannot read a picture. So, somebody who is blind or visually impaired cannot see it, and a screen reader cannot read it, and a computer, like the internet, cannot read an image. So what happens is what you call here is called an alt text. So the alt text is what defines it. So if Pastor Babu said he thought this was tea, but in fact, if I wanted it to be coffee, I should put coffee in the alt text, because if I put coffee and not tea, when the screen reader reads it, it will know I actually am trying to say it's coffee. And I can say it's coffee on a white cup with a white saucer and a stainless steel tablespoon. So as much details as you want. So when you design things, you need to put the uh, alt text. So I use a website as an example. So you can see this is a picture in a website. This is a lawyer. Now the screen reader or the internet doesn't know all this text here. It cannot read this is a lawyer. So if you go, so this is a WordPress site. You can see it's WordPress. So I went to the back end of the image. So in almost all web designs, whatever design, whether you're using WordPress, Wix, or PHP, you would be able to put the text. So like Babu was saying that was tea. If I wanted it to be coffee, what will happen here is the alternative text, I would put coffee here. So you see that this picture of this lady, it will not read what it's here. It will not read this phone number. It will not read this email. It will only read what is in the alt text. So when you're doing your designs, if you rightly um populate the alt text, that will help the computer, that will help the search engine optimization, and that will help visually impaired people to be able to read what what you're trying to convey. So just for us to note the importance of text. Another thing is about colors. You know, are important for making our content accessible, because those with visual disabilities can see darker colors more clearly than lighter colors. And millions, hundreds of millions of people have visual disabilities in the world. So I recall that my friend, uh, had, mother had a garden, and she sends him to go and pick tomatoes, ripe tomatoes. And each time he brings green tomatoes, not the red ones. And his mom was saying, "What's wrong with you?" And in fact, the mom had to hit him or smack him or beat him, that he's such a disobedient child. I sent you to go get red tomatoes and you bring green tomatoes. And he said, "Mom, but these are green." So the mom thought he was just being naughty. So she went with him to the garden, and she asked him in the garden, "Show me where the red tomatoes are." And he still picked the green ones in the garden. And the mother never knew that she never even heard about color blindness. So that was the time she realized her son was colorblind. So this is real for a lot of people. So if people are colorblind, then you want to use contrast. You want to be able to use contrast to be able to make reading easier for them. And there are so many tools online. If you just go online and see how to contrast colors. So for instance, went to Google and I wrote that, and I saw this website, WebAIM. So it's saying that this is a good contrast. What are the colors? This color is blue. So if I have, let's say, blue background or a blue text with a white background, for instance, this is a good contrast. It's 8.59 contrast. It passes some of the contrasting best practices. But if I make this lighter, lighter blue with white, it fails. It's not contrast well enough. So if you see the image that I showed you, this color and black contrast well. So if I come here and I put something, um, let's say something here like this, it doesn't contrast well with white. But if I move it here with black here, you see colors that were used here, the black with the gold, it it passes. So that if people who are even visually color blind, it still gives them an opportunity. So you can see how it looks here. You can see the text, the black background with the gold text. So we should also be mindful of color contrasts while we design our flyers, our websites, whatever digital content. These are little things that could help. And it's we also color is powerful, but color is not the only way to indicate distinctions. We can use other ways. We can use hues, contrast, brightness. We can use lines. We can use textures. So I'm going to give an example. So this is a good way. This is color contrast here. An example. On my left, you can see the red, the orange, the yellow, the light blue, and the dark blue. But imagine somebody can't read colors. So you could see how we use patterns and darkness of the grayscale to be able to contrast this. So I can make a legend here, but you see, I use different patterns here, or they use different patterns here, and you can also use that for contrast. If you come to the chart here, imagine you have phones, tablets, and laptops. Imagine you only use colors, and somebody cannot read colors. So you can see that the phone has dash lines, the tablet has lines plus a full stop, and the laptops is just plain line. So these are other ways too, and in which when we're communicating information, we can use contracts. Sorry, we can differentiate. Apart from using colors, we can use patterns. We can use brightness to be able to differentiate for people who are visually, who are maybe colorblind. Another way is text formatting and headers. So we can use headers to make reading easier. So you remember in the Google document here, you could put in headers so that you can see these are headings. You can different kinds of headers, header 1, header 2, header 3, just to make easy reading easier and to be able to differentiate make to put um, context to what you're doing. Because when you imagine you're reading something and you have just text, it's so difficult. But you can see, like on my screen, this is a header, text formatting and headers. This is a header. Then it has like subheaders, document outline, assistive technology. So this makes it easier. If I lumped if this Google slide lumped everything together, it will be difficult. So that also helps the screen reader or even people who are not visually impaired. It helps people to read your content more easily. Then you can also hyperlink. So when you're talking about something, you can say, visit the Google Grow homepage. And while you say that, to make it more accessible and easier, you hyperlink that comment, so that people, when you add links, it can help people to assess what is behind that link. So that's another way you can make things easy, because imagine I use the word here. Somebody says, what does Google Grow mean? But if I go and click the link, then, oh, there are some words. Sometimes you're writing and some words are difficult. So by hyperlinking them, that could make it clearer for people. So these are all little things that make it easy. So let's go to videos, how you can make videos more accessible. So if I go to our website, this is our website. When I go to the footer, Google Webinar Certificates here. So let me take one of the old videos that we have done. on this webinar. These are webinar videos. Maybe I'll just take anyone, just open this one here.
To get data together to see.
Okay, so this is a video we have done before. So what I could do here is, what Google does is closed captioning. So for people who are visually impaired, maybe they're old, not even, they can't hear. Like imagine you are watching football, soccer in a very noisy place, and people can't hear it. So you can use this closed captioning here so that people can also read. So you can see that it's in different languages. So if I come here now, I put a Nigerian language. So let me put English. Okay, so let's
the
hear.
patterns behind and the trends behind information.
So you can see all that I'm saying is automatically translating it. So if you can't hear me, maybe I totally reduce the volume here and I'm playing it. So you can read it. So I've muted this video. I'm dealing mainly with our students. So some people are not our students, and also gives me an insight that they prefer in the, okay, this is a mistake, to be MBA. So you can see that it's automatic that people, so when you do videos, you put closed caption, people can read. Then, as I was saying, there are various languages. So let me change this to French, for instance. Let's say I want it to be in French or Chinese. So all these languages are here. So I change it to French. So donner, cela signifie quelque doit and continuer. That's French. And as I earlier showed us here, it could be in Arabic. You can go through all the languages here. Afrikaans, Akan, like as many languages you can see here, it will automatically translate it. So doing videos on YouTube or on Vimeo on YouTube, this helps us to be able to translate easily. And let me take it back to English. So, like I said, like you could even put some. There are African languages. There's Urdu in Pakistan. There's all kinds of languages. There's Zulu, and that was the Nigerian language, Yoruba, that I had even picked. Another thing you can see here is you can, when you open the video, you can also open it here. I've shown us several times. You can see the transcript. Says show transcript. So this is the transcript. So you can see that this should be, it's not perfect. This is, I said MBA, but it said NBA. I guess because of the way I pronounced it. So there could be some nuances. So I can copy the transcripts here and I could still make that accessible. I can actually try and put my own uh closed caption manually, you know. So, but these are ways you can see that Google has made provisions through the closed captioning. Uh, when people watch videos, if they cannot hear, maybe they are impaired, uh, with they have hearing impairments, they can read. Maybe they can see, so they can read. And I was with a 90 years old man recently. We were watching, we were having a fellowship, and we were playing a video, and he couldn't. At 90, only one of his ear could partially hear. So we had to use the closed captioning, and most technologies have it. So you can use it so that you could also help people uh, who are disadvantaged in terms of hearing. So that's about the closed captioning. When looking at PDFs, PDFs are difficult to read, but if you want to be able to read, Adobe has, just like we saw with Google having some accessibility tools, you could also check Adobe for the accessibility tools. Then email accessibility, when you send emails, you could, if somebody is visually impaired, it's good to be mindful of logical reading order. So the email could have like a logical reading order. it's good to use only one column. You shouldn't put an email in two columns. Most emails like Gmail, Yahoo, and the Outlook, Hotmail, most of them will just be one column. You can also hyperlink things in your email. But one thing, if the persons if you're sending a bulk email, for instance, um, it's good to, and a professional email, not to use emojis. Now, if you're sending a personal email to one person, it's fine. But the challenge is, you know that a screen reader or a computer cannot read an image, an emoji. You remember we said it has to use the alternative text. So if you send a happy face to many people and any of them wants to read it using a screen reader, he or she may not be able to know that, oh, this is a happy face. So you could just keep it as text because the computer cannot read an image, it can only read text. So those are some of the ideas. And we're told basic things, not too many images, not too many pictures in an email, not too many links, visible font size 14, good contracts, avoid too many colors. And if we insert a video, like you saw, those videos should have the option of visual, what do you call it? Audio closed captioning. And you can see that for us that use YouTube, Vimeo, it's automatic. But if you use your phone to record and you just send a link from your phone to a drive, it won't have closed captioning. So just by uploading it on YouTube, and you can make it unlisted or you can make it private so that not if you don't want everybody to see what's on YouTube. So YouTube is an easy way to just get a closed captioning. And of course, we need to think of physical accessibility. If you have an office or a space, you could remove obstacles from physical space and you can confirm access. In many of the developed countries like United States, you know, you have places where people uh disability for people who are parking, for people who are using the elevator, there's, there's disability for people who are entering your office, you know, because they are using a wheelchair. So you see where they have that like concrete pavement so that they can use where there are staircases because a wheelchair cannot use the staircase. So they just use the wheelchair through the concrete pavement to access it. And you have the American with Disability Act. So like we said, disability is governed by laws in some countries and your business may not be compliant. But I know in many developing countries, these are not there. And of course, you welcome service animals. So service animals are like dogs for blind people. And these animals help them, you know, while they walk and also show your support. You know, for those of us who don't have any disability, you may not understand. But if you are here and you have a special needs child, a special needs brother, sister, or parent, or anyone who is loved, you really understand what I'm saying, why we need to do our best to focus, to show empathy, to show love. And many people who are disabled were born that way. It wasn't like, oh, they were they were just careless or they put it on themselves. They were born that way. If they were not born that way, several of them had accidents or difficulties in life that caused it. So um, beyond just the financial aspect of, you know, making them inclusive in our business, it's also important for us to do that out of love, out of genuine love for them. Right. So that's it. Where we we're done with that section and we're going to move to the investment section. So does anybody, before we go into the investment session, does anybody have any questions you like to ask or comments you like to make on the on what we've discussed so far on the accessibility for small businesses? Let me check the charts group. Uh, no chats. Anybody? Questions, comments? Okay, so let's go ahead. You can take all the questions. I just want to make sure that we're very good with time. So we go ahead and we go into investments. So this is what we're going to talk about: define investments, investment goals, types of investments, how to analyze an investment, and the Joseph strategy. So let's start with what is an investment. Very simple. So an investment is the act of putting your money, time, or resources. So time is also powerful. Not only money, you can invest time into something with the expectation of getting a profitable return. So you can see those words that were highlighted is that you want to get a profitable return when you do an investment. That's the purpose of an investment. It's for the future, and you're looking at gaining something, gaining a return for the future. So it's always good that you just don't invest in isolation. You have a focus, you have a vision why you're investing. And these are some examples of why people invest. You want to start a business, but you don't have all the capital. So you may want to invest, put something aside so that you can raise a business capital for your business. Other people invest for retirement. One day, all of us, if God gives us life, we won't be as strong as we are today. Even if it's in the next 50 years' time, we will all need to slow down, and you want to invest for retirement. Another important thing people invest for is their children's education. You have children and you believe that you want to support them throughout their lives. Not every country. I know that in developed countries, you have student loans. So many children have the opportunity of, using student loans. But in developing and less developed countries, those loans don't really exist. So you really want to, think about your children's future. And sometimes you invest to buy a house because, shelter is, I think, one of the very basic and important needs of life. And you also want to invest because you want to be a blessing to other people, because you could have passion. You love people, you want to help people. We talked of people who with special needs, people who are disabled or handicapped or challenged, to use a better word. But you can't help them because you don't have the resources. So these are all reasons that we can invest. So let's look at one. The first one is stocks. So think of this like if you have a cake, if your company is a cake, and I give you a slice of that cake, that slice is called a share or a stock because you have ownership in that company. So I use like Apple, Apple that makes the iPhone, iPad, Mac, and all those things. So if you go and buy Apple stock, you have like ownership in Apple, and you like it's like having a share in Apple. So I'm going to I really think that I want to show you, I need to join with my mobile phone so that I can show you some investments, how it just looks like, so that as we speak around it, it comes to life. So let me try and join this meeting with my mobile phone um, and stop sharing my screen so that I can share with the mobile phone. I have this here. Okay. So in these stocks and shares, let's say I want to invest in Apple. So I click here, Apple. Can buy Apple shares. So as of today, Apple shares is $277, and it changes every second, 15 cents. So this is how it looks like. Then if I come here, let me just, this is a day. So for today, you can see that Apple share has come down. It just came down slightly today by 0.12%. If it's a week, it's gone up by 3.95%. It is um a month. Let me put a year. So if I had bought Apple at the beginning of this year, if I had bought Apple January this year, you can see that the price in January this year was around 242, 239, thereabout, or 242. But today is 277. So that's an investment. If I had bought Apple in January, I would have made 15% profits on Apple shares by buying Apple shares at the beginning of this. So that's a stock. And it could be Apple, it could be Nvidia, it could be Amazon, it could be Netflix, any pretty much any stock. So that's what stocks look like. So let me just, so that before I go to the slides, let me just show us through the app so that I won't be switching to and fro. So another way you can invest is what you call an ETF. So an ETF is a group of stock. So let me open this ETF here. So this is Vanguard S&P 500. Now, if I only invest in Apple, I invest in one company. But if I invest in an ETF, I invest in, let's say, all the 500 companies of Standard and Poor's 500, meaning these are the top 500 companies in the United States Stock Exchange. So in this 500 copies, Apple is there, Amazon is there, Google is there, Netflix is there, Walmart is there, Shopify is there. So an ETF helps me to spread my risk so that I don't just invest in Apple, because I may invest in Apple and Apple will go down. So one of the best ways to invest is in a broad ETF that mirrors the whole market, because it will be, except there is like economic crisis, it will be difficult that all these 500 companies, all of them will fail. So because if I invest in this ETF, imagine Apple has failed, then imagine Amazon went up, it will balance out. So that's why you see that, whereas for year to date in Apple, you saw that I was making 15%. Because this is lower risk, I only made 9. If I had invested in January, I had made 9.85% profits on this ETF if I invested in January of 2025. So that's because that's because um there's less risk in the ETF, because I cannot have, and I don't want to be the one to be buying one stock. So the fund buys all these 500 companies, and when I buy the fund, I indirectly have shares or own like 500 of these companies. So I would encourage you, if you are not used to stocks, don't go and pick one stock. An ETF will be your best. And these ETFs, the S&P 500, as they call them, over the past maybe 50, 60, 70 years, averagely they make 10% or 8 to 10 or 7 to 10%. So if you're having 7 to 10% on your return every year, it's not a bad investment in US dollars. So that's an example of an ETF. So a mutual fund is like an ETF. Maybe you've been hearing mutual fund. So it's the same thing, because a mutual fund goes and invests in many places, in many stocks and in many other markets. But the difference is that a mutual fund cannot be traded. So this one, an ETF, I can buy and sell online like this. But a mutual fund, I have to contact the fund manager. So the ETF and a mutual fund are pretty much the same. It's just how they are managed. ETF, you can trade it like a stock on your. So this app I'm using is called Revolut. I don't know, in your own country, you have to find like the app that you can use to trade in your stock exchange or trade internationally. So I don't want to recommend anyone, but the one I'm showing you is Revolut. But I think this one you have to have, it's not all countries. You have to have maybe like, it's a UK based company, and you may need to have like UK residents or something. Anyway, but you always find almost all countries, even developing countries, have some alternative. So that's how that looks like. So let's go to another one before I leave. Let's go to, still under investments. Let's go to commodities. So let's go to gold. Let's open gold. So if I had bought gold this year, I would have made 53% on gold, because at the beginning of this year, the price of gold was about just 2,000. 2,000 per, I don't know how they measure gold again. Is it per ounce or whatever by the measure? But if I had bought any portion of gold this year, today I would have made 53% on buying gold. That's a lot of money. I've made half of my investment if I invested in gold. Why? Because this year the stock market was very volatile. Remember, there's war in Ukraine and Russia is still going on, the war in Gaza and Israel. Remember the trade war between China and United States. All these cause uncertainties in the market. So investors ran to gold. But look at how much money anybody who invested in gold. And I don't mean, so you don't have to have like the physical gold, the gold necklace or the gold. Just buy gold on the commodities market. You can buy gold, silver. You saw all those commodities, gold, silver, platinum, and so on. And if, like, let's see what silver did. Silver, I don't think so. See, silver did as well as gold. Oh, silver did crazy. Silver almost doubled. So silver was 23, it came to 41. So silver almost doubled. So if I had bought silver at the beginning of January 2025, by today I've almost doubled my money if I had just bought silver. So you can see that this is an investment in commodities. But again, there is a big risk. I could also have lost all my money because this year was very good. But let's look at 5 years. Okay, 5 years still not bad, 145%. But sometimes it can go down. So that's the idea. There is no certainty. So that's another thing. You can also invest in commodities. So that's commodities. Another thing you can invest in crypto. So you can see Bitcoin. So you can see that Bitcoin, let's see how Bitcoin performed this year. Okay, you can see crypto is not good. Uh, sorry, I'm trying to, yeah. Okay, good. So crypto, if you bought Bitcoin at the beginning of this year, you would have lost 7.65% of your money. So crypto went down this year. So you can see. So you can never tell. While you saw Apple went up, ETF, S&P 500 went up, gold went up, silver went up, but crypto went down. So people who, if you want to sell now, you'll be making a loss on your crypto investment. So since January you bought crypto, it would have made 7.57% loss. But if you look at it on the long term, let's say if you bought crypto 5 years ago, not just in January, 5 years ago, you'd have made your money times 4. You'd have quadruple, I don't know. Anyway, you have made investments 4 times what you bought it if you bought it 5 years ago. So these investments, they have all their risks. So let me leave the app now and go to, I think I've gone through most of them on the app. So let me leave the app now and go back to the slides. So that we can go through the slides again. So I'm going back to the slides. So like you saw when I was showing us, stocks, you can make a lot of money, but they are very volatile. You can lose even your investment. You can lose your capital, especially if you go into leveraging margins. You borrow money. So margins is that some stock exchange allow you to even borrow money and invest. Now, if you do that, you can lose money, not only your capital, but even be owing the bank. So if you don't know a lot about trading, just stay safe with what I shared with us, which is the ETF. Just do this one, like the Vanguard S&P 500, SPDR S&P 500. Just do ETFs if you want to be safe, because there's a lot about trading. If you don't know a lot, you could lose all your money. So like as I said, an ETF is a diversification. It takes a lot of funds from various companies and it's cheaper. Whereas a mutual fund is also diversification, but it's not as cheap as an ETF. So if you have an opportunity, do an ETF. But if you don't have, you can also, it's good to do a mutual fund, because the mutual fund will help you diversify your investments. But usually they may have a bit of higher fees. Then there's what you call bonds. These ones are very safe because they're treasury bills. So because why are they safe? Because they are backed by your government or backed by strong companies. So if you buy a government bond, which is basically a treasury bill in your own country, but they may not be perfect. I remember the Ghanaian bonds had failed, even though they were backed by government, because I had bought Ghanaian bonds and they failed. So, but usually bonds don't fail because to take the government to fail for a bond to fail. So these ones are low risk. But because they are also low risk, they don't give you a lot of money. So you may just be making 2%, 3%, depending on your country. Some countries, their bonds as high as 10%, their treasury bills. So, but if you are a low risk, but if your country's exchange rate is not stable, then you always want to find a stable currency like dollar, euro, Singaporean dollar. Countries currencies are more stable. Because if you invest in an unstable currency, even if you make the money, by the time you want to get your investment back, the currency has devalued and it will not be very useful. So another one is the real estate. So we all are used to this real estates because they are tangible. You can get money in two ways. You can get money from rent, you can get money from capital appreciation. So if you buy a property for, let's say, $100 and you are renting it every year, you are getting, let's say, $5 every year. After 5 years, you get your rent of $5, $25. Then that property must have moved from 100 to $150. Real estate rarely ever depreciates. Rarely, rarely ever. It can if your currency depreciates, but usually it rarely depreciates. But if inflation and your currency depreciates, then maybe it's somehow depreciating, but it's usually appreciates. But again, real estate involve a lot of capital, property management, and the market can also fluctuate. But another thing you can do is that you can invest in a real estate fund, trust fund. So let's say you don't have millions to buy property on the stock market on the investment portal like the one I showed you. There's what you call a real estate investment trust. So you're not buying the whole property. You can just go and buy a small part. Maybe you only have $10. You go and buy $10 for the property. That is like still an indirect way of investing in real estate. Then, of course, this is what a lot of us are used to, savings accounts, where you just, have your savings account and you put your money in your bank and of course, very low returns. Many of them give less than 1% or 0.00 something percent, but it's pretty much safe because they are backed by the insurance. Like in US, they have the FDIC insured. So you rarely be able to lose your money in a savings account. But again, you rarely make any money from it. Even if you put it for 100 years, you may make not very little from it. Then we did talk about cryptocurrency. You saw we saw the price of Bitcoin. Bitcoin had come, this Ethereum. Like people have various views. I like more of stable coins. Stable coins are like USDT because I I don't understand crypto so well, so I don't want to gamble because I don't feel gambling is right. So if you understand crypto well, fine. But for people like me who don't understand it well, I feel it's like a gamble because I look at what is the underlining idea. It's about mining coins through cryptography. And because these coins are in limited supply, they appreciate. They are safe, they are good, they are acceptable. They have actually all the qualities of money. But because they are not backed by any government, they are decentralized. Uh, I just I just feel there's a gambling factor in it, and that's my own personal bias. But if you understand it, it's really up to you because if you don't understand it, a lot of coins can can crash. Like when Donald Trump launched his cryptocurrency, I think his coin and his wife. That day they launched the coin. I think the coin went to like almost 70, $80, a unit. Very high. So imagine somebody bought it by the that week, that same coin crashed to about $7. So the coin lost like 90% of its value. So imagine somebody went, so Donald Trump is the president of the United States, invested in his coin and invested 10,000 US dollars. That 1 week, the amount is just $1,000. So, that's really crazy. So because of that, I would say we use discretion. But my rule for anyone who is investing is don't invest in what you don't understand. That's a golden rule. Never invest in what you don't understand. You need to understand it to invest in it. And you saw we did speak about precious metals. You saw the price of gold. If you had invested in gold or silver this year, you would have almost doubled your money, or gold half. So um, precious metals. And because of these exchanges, you don't have to go and be buying the gold or silver. Just buy them on the exchange and you can make your money. So there's a good opportunity. And even if you want to buy them physically, because the same way it's on the digital market, it's also on the physical market. So it means that if you had bought a gold necklace, if you had bought a gold necklace at the beginning of this year, that your necklace is like 1.5 times in value if you want to sell that gold necklace today. Yeah, so it's the same pricing, relatively the same pricing, whether it's digital or in physically. Then of course there's forex, and many of us are already used to the uh, forex markets, and I think this is the biggest, like virtually the largest financial market in the world. People who trade in forex, because different countries, and one of the pairs, famous pairs, is the Euro USD pair. And what are the advantages? Because it's highly liquid. You can always get your money. You can trade forex 24 hours. You can trade more than you own. That's the leveraging. You can the transactions are low, but again, forex has a lot of scams. A lot of exchanges claim, if you want to do something, you have to investigate. Some people claim that they are trading forex, they take your money and you lose all your money, they disappear, they have no office, they have no physical presence. There's a lot of scams. It's very risky too. You can lose your money. A lot of people have lost money trading forex. Again, if you want to trade forex, you have to understand it deeply. It's not something that somebody trains you for 2 days and tells you that he's a millionaire. And I tell people that if you notice, most of those forex trainers, they make their money from training. And you ask them a question: there's so much money in forex, why are you not making it for yourself? Why do you want to come and teach me what you have not taught yourself? And the truth in life is, if anybody is really making money, how many times has Elon Musk, Jeff Bezos, or Mark Zuckerberg come to YouTube, come and train people to tell them this is how I became a billionaire? They don't. People who make money don't rarely will come and teach the world. They may give you general ideas that are publicly known, but their true secrets they guide into themselves. Because if everybody knows their true secret, then everybody will be doing it. So always also be wary of people who claim that they are making millions and give you a lot of incentives. Most of them are just false. They are just trying to get your money. And it's it, and remember, it's a zero-sum game. Why did I say it's a zero-sum game? It means that if I make money in forex, somebody loses. For me to make money, another person must lose. That's a zero-sum game. So everybody cannot make money. As many people are making money, the same equivalent number of people are losing money. So when people tell you, oh, everybody's making, everybody cannot make money. So, and everybody's into it to make money. So it means that some of us must make money, some of us must lose money. So it's a zero-sum game. So when a game is zero-sum, it means you have to be careful that you are not on the side of losing in that zero-sum. So there's an element of gambling again in it. Anyway, the golden rule, like I said, don't do what you don't understand. The people tell us many nice things, but we should be careful. And now this one for me is very important, because I believe that the greatest investment is in God and his kingdom, because we are faith-based. Because the Bible has said you can have treasures here on earth. You can have money, you can have cars and everything, but we would all die and leave them. And none of us, because we were born without anything, we were born empty or naked, as it were said, we will also die naked without anything. So why don't we also think of eternity and impact people's lives so that they could be treasures, start this life, you know? And if you invest in God and people, you have personal fulfillment, you have community building, you have spiritual growth. And your children, your family is a great place to invest in, because when you invest in souls, that investment is secured. The scripture says that there is no rust, there is no moth, there's no downturn. Like you saw crypto, crypto went down this year. But if you use that money on crypto to bless lives, that investment can never go down. It's secured for eternity, because whatever you do in blessing people is secured. It's not going to go down. So just to give us thoughts about that. And we can see that how can you do this? By praying, encouraging, serving, and supporting the things of God. Now I just want to just share with us very quickly, as we're starting to round up, how to make investment decisions generally. Generally, there's what you call the technical analysis, and the fundamental analysis. Now, what are technical analysis? You want to see the trend or the history. So I have here Apple shares. You can see Apple is going down. Let me refer this, refresh this. Yeah, Apple went a bit down today. So the trend analysis is, what is the trend of Apple? When we did 1 year, you can see that 1 year Apple had gone up because it started around here, around 242, and it's 276. So Apple was good 1 year. So you look at the trend. Now, why did Apple? This was the day that US in April, where Donald Trump and China had a lot of we had a trade war between China. So the markets reacted and the markets dipped. And you can see Apple is rising again. So you want to see the trend of how Apple goes up and down. And it could be on the year to date, it could be 1 year, it could be 5 years. So for 5 years ago, Apple was 123, and Apple has more than doubled in 5 years. So looking at these charts and understanding charts and how they move up and how they move down and why they move up and why they move down, that can help you in analyzing, analyzing the historical prices using charts, identifying patterns. So if you know the pattern that anytime, let's say, Apple is about to release its earning reports, is about to release its profit, the prices will go up. So those charts, in simple terms, you need to look at patterns because they say patterns help us predict the future. If you scientifically and statistically, what is statistics? Statistics will take patterns of the past and will tell you, let us extrapolate those patterns and predict the future. So that's what this the simplicity, the simple definition of a trend or a technical analysis. I'm looking at the technical patterns of the investment. So I know that, what is the pattern of gold? How does gold go up and down? What is the pattern of silver? How does it go up and down? What is the pattern of crypto? How does Bitcoin go up and down? Those things help you. Then you can also go to fundamental analysis. Now, this is beyond pattern. This is the value and the health. So if you come to Apple here, this is Yahoo. So almost all stocks, if you go to Yahoo Finance, you can, or Google Finance. So I like Yahoo. I use both Google and Yahoo Finance. So if you come here, what is the value and what is the news? So let us look at the news. See, Apple set to become the world's top phone maker 1 hour ago. So this news is telling me, Apple is good. Apple is going to be growing. It's good news. EU says Apple ads and maps likely qualify as gatekeepers. European Union has spoken something good about Apple. Okay, that is now fundamental. It's news. Good. What again? This week in cloud AI, power product. Okay, so let me see this news. Yes. Okay, so these stocks are moving the most today. Alphabet, GameStop, strategy. Okay, this not. So you want to know what is going on in Apple because news affects stocks. If Apple is sued by European Union or African Union or any country, it could affect their stock because they have to pay a lot of fines because they'll say, there's data breach, the privacy issues. So you want to know what is going on in that stock for you to be able to know whether it's a good stock. But you can see they say it's going to become the world's top phone maker. So that sounds good news. Then you want to look at fundamentally what are its profits. So look at the revenue. So in Q1, it made 125 billion in revenue, and in earnings per share, you can see it made 36 billion. So you can see that this, even though it came down, but company is making billions. It's making billions. And if you go up, look at the capitalization. If you go up here, Apple is $4.1 trillion in market capitalization. I don't think the whole of Africa, I don't know the Africa GDP is up to this. So this is just one company. This company is bigger than definitely every African nation and many, many countries in the world, not only in Africa. 4.1 trillion, this company. I think it's bigger than the whole continent. So it's a solid company. Then you come here and you see, okay, look at it's making profits. And all this information is free. Then look at the earnings. So you can see that this is the estimate and the actual. almost every, so the estimate is how the markets think is going to perform in terms of its earning per share. You know, how much money, how much earnings, how much it has, how much profit. So this earning per share is like how much profit is Apple making. And you can see that each time Apple is beating the estimates. Is beating the estimates. Every time Apple is beating the estimates. So you can conclude Apple is a solid company. It's a solid company. You can conclude by what you are seeing here. You look at the financials, you look at the revenue, you look at the, so these ones, look at the health, the news, and the value. All these things are what you call fundamental analysis. So the technical analysis, we're looking at the trends, how the charts were going. The fundamental analysis, we're looking at what is the company's financial performance. How is it doing? What is it rated? And what are the news around it? And it seems positive. But of course, it can come down temporarily because tomorrow, why there is still risk, tomorrow, Donald Trump can wake up and say antitrust. Apple is too big. Break it into 5 companies. And what happens? The shares crash down. Or somebody can come and say Apple was used in an AI scam. Apple technology was used in scamming a lot of people from their investments, and the thing crashes. So we don't know. Even though we've seen it solid for today, we cannot guarantee that it will forever be solid. But typically, it should be. So these are ways that you can see that companies are evaluated. But I want to round up. This is my final slide. Is one of the easiest way is investments is to buy at a kairos, an opportune time. And what I call is just what the Bible says is the Joseph strategy. So what did Joseph do? He invested 1/5 of the produce of Egypt for 7 years when there was plenty. And when there was scarcity, he began to sell it. And that made him and the Pharaoh of Egypt like the richest people in the whole entire universe. What was that? That everything, there's a Kairos moment. Like, let me show you Apple again. If this year, look at this year, if in April, when Apple dropped to 172, you bought it in this Kairos moment, just in April, between April and today in December, in November, you're almost not doubling, but you you you're getting to almost doubling your money, maybe 70-80%. I haven't calculated it, but this was an opportunity because a trade war happened and you took opportunity of it. So in investments, there are opportunities, but opportunities, I want to tell us, they don't happen every day. So you can just see an investment that, okay, something happened, gold crashed, and you don't know when to buy because it can crash and crash further. So you have to know when is the right time to buy because you don't know what extent it will continue going down. If you buy and it keeps going down and down and down, you can even still lose. So you have to know what is the right moment where there's an opportunity. So in the case of Joseph, there was the right moment. There was a time that food was cheap. There was a lot of food and he bought. There was a time in the United States where there was the subprime mortgage crisis. So those were mortgages that were given to people who didn't have good credit history, and a lot of them defaulted. So the real estate market in US crashed. Banks were crashing. Houses were very cheap in the United States. And some people just took that opportunity and bought those houses. Of course, over the years, those houses have recovered and they are 3-4 times. And that's how some people became millionaires. If you bought Nvidia, Nvidia stock, let me show you here. Nvidia stock is the stock. If you bought it about 15 to 20 years ago, you would have been a millionaire today. Because this stock that is it's about 172. At some point, this stock was like 40 cents. You can see it here. It was like 40 cents, 10 cents. So imagine buying 1,000. For this thing to be a million is times 4. So for 1.7 million, let's say times 4. So if you bought 10,000 at 40 cents, 10,000 at 4 cents of Nvidia, $400. So if you bought something of $400, today you'd have been a millionaire. Just $400. You bought it in the 90s. You bought it maybe 2000. You bought it 25 years ago. And maybe you bought it for your retirement. You had $400. You just invested it. And you say, okay, you buy it and you forget about it. Today you would have been a millionaire. So you can see the kind of opportunities when you buy at the right time and you buy the right investment. Okay, so that's just an example. So let's we close here. I'd like to take your comments, your questions. Okay, what site is the investment? The investment, okay, Pastor Bello, can you explain what you mean? What site is the investment? The one I showed was Revolut.
Okay,
It's an app.
I mean the site the app you were showing us that you were using as an example.
Okay, is this app? It's called Revolut here. This one. It's called Revolut. Yeah.
Revolut. So,
Yes. It's based in the United Kingdom. Yeah. This was the app, Revolut. Yeah. So, but there are many. I don't know. Depending on your country, if you be able to use it. So, like I use PD. This the I don't use much of this, even though I showed this as an example. But I use TD Direct Investment. This is what I use personally. TD Direct Investing. So there are so many. There's Charles Schwab's. Then I know this one. I use this one too, and it's very good. It's based in Bahamas, and I think they take almost any country. Trade Zero. Uh, Trade Zero. But again, please do your due diligence because there's a lot of scam in there. So I use Trade Zero too. But please I'm not recommending anything to anyone because money matters. You have to do your due diligence because I'm very careful. Okay. Let me see the other comments. They kindly share the slides. Okay. We will share the slides on investments, but the Google slides, we'll give you the summary because Google doesn't allow us to share their slides. But the one from FLU will definitely share that. What happens if the investor dies? Yeah, so you have your next of kin. That's why. So even if you don't, so if you have any investment, you can define your next of kin, usually your spouse and your children, or your brothers and sisters if you don't have spouses and children, or anybody. You can even put your parents, anybody, you can put anything. But if you don't have your next of kin, a next of kin, and an investor dies, that money can be lost if nobody claims it. Because what will happen is that the companies will just keep it. But what most people do is that um the spouse, as like the husband or wife, are automatically, the law in most countries, they are the automatic beneficiaries is going to be your spouse, almost like automatically. So all they need to do is to show the death certificates to say, okay, um, my uh my spouse had an investment, passed on, this is death certificate, transfer it to me. But you have to be the one to find it because like those corrupt politicians in African countries, when they loot public funds and they go to Switzerland and they die because they don't even tell their spouses, or the money is not even is looted funds. Many of those monies get trapped, and really the banks and the investing firms, they enjoy it, they take it. There's a lot of property and money that people who, because they didn't get the money the right way, they never were transparent, and their families don't even know that they have that kind of money. So when they pass on, it can be lost. So that would be my thoughts. Yes, the video is usually shared. The video is usually shared. We're going to share the video too. That's what we usually do. So you just watch out for your mail. Okay. Does any other person have AP Bill? Are you also raising up your hand again? Does anybody have any question?
yes.
First of all, thank you.
Okay. Yes.
I want you to
I'll take you.
enlighten us.
I'll take you. Amadi. Let me. Please let's allow AP Bello speak. Then Amadi. Please you can speak. Yeah. Go ahead,
All
please.
right. Okay, please. I want you to shed more light on bank shares so that we can have more understanding how profitable and how can one actually get more benefit
Okay, which bank? Can you give me any bank? Tell me the bank you bought their shares.
the bank shares.
Can you tell me any bank?
Because a
Give me the
lot
bank.
of bank has been advertising share.
Can you give me the
First
bank?
Monument Bank,
First Monument Bank.
First
So let's
Monument
see.
City Bank of Nigeria.
FCMB. FCMB. Shares. So I just go to Google. I put FCMB. So Financial Times have it. So it's 10 naira today. Over the If I invested in January, it has increased by 14.89%. That's nice. So it means that if I bought these shares in January, can sell it and make a 14% profit. So you can see it that today it is about 1080. In January, it was about 9 naira and some kobos. So then it peaked. It came to about 11 somewhere in March, and it peaked here. So it's not a bad investment. From what we've seen here, that we've made some money. But very importantly, you may need to check the dividends. So you have to make sure, because it pays dividends, but see, dividends are 55. You can see 55 annual dividend yield is have a 5.14% on dividend. So many of these banks, they also rip off people because they're not paying dividends, because a lot of people don't have dividends. They'll send you. So you have to make sure that you get your registrar. In developed countries, it's usually automatic, but I know in Nigeria it's not automatic. So what I would encourage you to do is get to your registrar, make sure that you have e-dividends. So make sure you register for e-dividends when you buy any of these shares, so that when they pay dividends, you get the money, because a lot of people are being ripped off. They're not being paid their dividend because they will tell you they sent it by postal mail. We know that postal services in many of these developing countries never work well. People don't get their dividend certificates. So the safest will be the dividends. The 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 capitalization, let me see, is 457 billion in naira. Doesn't look bad. So on a plain level, let me see, historical prices, financials. So let's look at the financials. Okay, I don't have access. This is not giving me access. It says I have to subscribe, because I cannot still say how good it is, because until I see their financials of FCMB, so I can come here and I say FCMB financial statements. Let's say 2025. So I will come here, because it should be public, and I'll go and see their financials here, and I'll go and study it to say um how well are they doing. And I can I can really use AI, but I have to be careful, because AI can make a mistake. I can say, tell me about FCMB Bank in Nigeria, profitability, revenue, are there losses? Is it a good investment? Don't worry about the typo. I'm just writing quickly. If you understand. So it can give me, so it's giving me some ideas. So it has said year-on-year change, gross revenue. So I can see the revenue is increasing. Profitability 7%, on year-on-year. Then what is it telling me? Profit after tax. Yeah, it increased. No annual losses, so it doesn't make any loss. So pretty much it says, is it a good investment? Stock perspective, evaluating it is a good investment depends on individual the tolerance. This is the share price. So the price earning ratio is good. It means it's a cheap stock. It's a good way. So the dividend yield is also good. We saw the sentiment is strong, meaning that analysts are saying you can buy, and the price target, even though it's 10 naira, the 12-month target is 12 naira. So I would say that FCMB is not a bad idea based on this superficial analysis I've done using AI going to check. But again, I won't stop here. What I did now is just like for 2 minutes. I won't make an investment decision 2 minutes. I will spend some hours doing enough research. I usually will spend at least 1 to 2 hours. I'll do my research, check it, go to the financials, read it, study it, look at the financial statements here, look at the financial statements. So if you're not an accountant, you don't want to waste your time, you can just ask AI to tell you, which is what AI has done. It told me the profit. So it's making profit. But again, you know that the Naira is depreciating. So I can ask it, based on Naira depreciation, is it really making good profits? Just this is the question again, and it will give me its idea. So it says the Naira the FX valuation, massive profit boost. These gains have been a primary driver. Okay, I don't know. Negative side, increased costs and real. Let me see the conclusion. Yes, they make good profits. So even though Naira is valuation, the core business interest income is robust. You see, the real USD profit is complicated. A large portion of the growth is tied to FX gain. So they are giving me an insight that a lot of the money they are making is because they are selling Forex. It's not because, though they say that they are making interest too, but they make a lot of money on Forex sales. And that is temporal. If Naira stabilizes, it may not be good. So a lot of these banks make money on Forex sales. So you see, I'm going to do a lot of checks and analysis to say, and if I don't know finance, I use AI. If I don't understand all the financial jargon, I just say, okay, tell me for a beginner. I'm not a financial person. What do you think about this? I'll ask as many questions and I'll not use one AI. I'm using Gemini now. I'll go to ChatGPT. I'll use ChatGPT. I'll use Gemini. I'll use DeepSeek. So that's what I would do. But by the time I use 3 AIs, I should get a good answer. Then I know that, okay, this is a solid investment. And usually, personally, I have used AIs to make investment decisions, but I do it thoroughly. And I can say 90% of the time, AI makes a good choice. Not always, so AI can be very wrong, as in 100% wrong. And AI does not know the future. After doing all this, if you do all this tomorrow, and what happens? And there's a military coup in Nigeria, and soldiers take over the country. All these things will change, and nobody knows that. And AI cannot tell you whether somebody will plan a coup. So there's so much uncertainty. But you do I mean, the best you can based on what you know. So based on what you know and based on the information we have, we can say, okay, this is this is um this is reasonable. Okay, so let me take the next person, Ahmad, who raised his hands up. There was
Uh-huh.
someone who raised.
Okay, I will.
Yes, Amadi. Yes, please go ahead.
Do you hear me?
Yes, we hear you.
Okay. I want to speak about investment in startups and
Okay,
small
startups.
startups.
Good.
I want
Yes.
to ask about your idea about investing in a startup. I think one of the most profitable investments are investing in startups. And do we have a place for investing in a startup? How we can be sure to invest in which startups?
Okay, very good comment, Ahmed, and thank you. So startups are businesses that they're just beginning and they have high possibility of scaling and being successful. And like Ahmad has said, if you invest, like maybe they are, at the time they came when they were a startup, especially technology companies or just a financial technology company. Let's say PayPal or Stripe or any company where when they were starting, very little, very cheap, and they now blew up and became extremely profitable. Now that's a very big way. So it's still the same principle. I would recommend that even if it's a startup, check. Okay, you may not see the technical analysis because they have not been there for long, so you cannot see the trend. But what are the fundamental analysis? What are the assumptions? Okay, even though they are not made the money, what so far maybe they've operated for a year. What is their revenue? Let's say they've not even made profit, but are they making revenue? How do they plan to scale? What is the clear plan that they are scaling? What is the customers' experience? What have their customers said about them? Because they don't have to be making profit, but how are their customers engaging them? What is the clear idea of scaling it and making it big, what are other analysts saying about them? Other people who are evaluating them. So you need to go to check the company. To check, it's like if you go to a doctor, they tell you go to the scale, check your blood pressure, check your blood sugar, check if you do your annual medical checks, check your eyes. So you need to do the annual medical check for them and to see that okay, the potentials are there. And especially in the startup, who are the people behind the company? Do they have a track record? Do they have integrity? Because some people just go and take people's money and they never they lose their money. They just they lose their money. Now, in terms of places where you can in invest, most startups don't will not have quoted their shares yet on the stock exchange. They may give it some time, but there are several platforms. Can't remember them. Uh, Platforms for startup in, investors. Sorry.
I want to admit something, another.
Yeah, go
I've
ahead, please.
done a lot of research about,
Research. Good.
investing in startup. I'm in business startup field for just, I think it's been 1 year that I'm in this field.
Right.
And I think investing is an art for me, I really like to invest in, values in businesses. We can find some big values in some small businesses that they would be so much profitable for us in the future. And because of that, I like to invest in startups because, as you said, they have a high and a percentage of possibility to grow, and it would be a very good investment. The value that that business gives. Um,
So what has been your experience? You started 1 year. So far, the ones you've invested in, how has their trajectory been? Have they been growing?
yes, it was good. Uh, Investing in some startups. And the most important thing about the startup is this: who's the CEO of that startups?
Yeah,
When
the
I'm
people
trying to
behind it.
invest in some,
Yeah.
the persons that they are work for that, that goal, their passion, it's so important. And if you find a good and right man, you can invest, and it would be so profitable for you in the future.
Thank you. Thank
100%
you for
right.
sharing that. So we can we can take that. Like I always say, you spent a lot of time researching. Like I don't do startups because I think I did one and it failed, so I got discouraged. But what I encourage everyone, um, any investment, including startups, is what Amada has done. I mean, to take a lot of time, Amadi, sorry, take a lot of time to do your research. Don't invest in anything you don't understand. For what he has said, like he said, one of the key things he's looking at is the CEO. Who is the person behind it? What is, and I mentioned that too. So you need to understand what you're going into. And another investment 101 is diversify. Don't put your money in one place because one place can fail. No matter how good one place is, put it in multiple places. So even if you're doing, let's say, stocks, it doesn't mean you cannot do real estate. It doesn't mean you cannot do startups. It doesn't mean you cannot do commodities because you never know. But going to put your money in only one place, it's like the very basic no-no for investments. You need to diversify because if one fails, the other can sustain. But you don't want a single point of failure. A single point of failure means that if that fails, everything fails. And people who have tried that, got themselves in depression. So you need to scatter it. That's very, very important for any investment you do. You need to put it in multiple places because you don't know. And I mean, apart, maybe if you're a prophet and you know you know what's going to happen tomorrow, you can do that. But for those of us who don't have who don't know what the future holds and are relying on technical and fundamental analysis, we can't do that. Okay, thanks a lot. Uh, it's 1.5 hours, the webinar. We have 4 minutes left. Does any other person have any question or comments before we round up? Any other question or comment? So you get the video, and I do hope you would all consider investment. Start small. So another thing I forgot to mention is always do a pilot. So when I want to invest, I won't put, let's say I have $1,000 to invest. I would not put my 1,000 immediately. I would study it. In fact, I would go and get I'll go to Android or Apple store and get an app, play with it. The app can have real numbers, but not real money, or real to simulate the market. So I will get an app, I will do it, I will study it, then I will do a pilot. I could invest, let's say, $100 and see if I can sustain it. If I invest $100 and I'm comfortable and it works out and I make a profit and I exit, meaning that I take my money, I take my profits, then I can now bring in my $1,000. But I would really just rush or encourage anyone to just go in and put all your money in something you don't understand. The world is full of so many scams, and the investment world can be ruthless. I know people can lose. But there's something somebody shared in one of our class, and I really liked what she shared. She said that even if the market goes down, don't panic. If you invest in anything, like commodity shares or crypto, like let's say Bitcoin is down, don't sell. Just be calm. Usually, over time, almost all investments will rise again. So if you have a temporal setback in your investment, don't panic and sell. Except you know that that investment is going to crash to zero, meaning it has no fundamentals. It means it was a scam. So if the company was a scam, yes, you can sell because it's never going to rise. But let's say you bought an Apple. If Apple goes down today or for this month, most likely from the technical analysis, Apple will rise again. So don't panic that, oh, my Apple shares went down. And another thing is, don't check your investments every day. It would affect you emotionally. If you check it every day, an investment, you just put it there and leave it and do other things with your life and come back. It's just like if you plant a crop, you don't go and check your farm whether the crop is growing every day. Usually you will plant, and after a week, 2 weeks, sometimes a month. Sometimes you plant trees, you check after maybe long months or even years before you are looking for your harvest. So an investor should also be a bit longer term. Yes, we have Benjamin. Your hands are up. Go ahead, please. Benjamin, you have your hands up. You want to say something? We have 1 minute left.
Saying something already. Well done, sir. You talked about
Thank you, sir.
forex trading. So I want to ask, can someone go into forex trading without being trained about it before going into it?
No, you can do self-training. Like I'm a self-trainer, so I would say you have two options. You can get a training from somebody, or you can do self-training. Today, information is not a problem. You can learn so much. I go to YouTube, I watch YouTube videos, I go to AI, I study AI ideas. So you can do self-training, but the answer is no, you must be trained, because if you go into it without training yourself or asking someone to train you, you would almost definitely lose money. Almost assuredly. Because remember, I told you that Forex is a zero-sum game. It's a zero-sum game,
Mm.
meaning that for those who are gaining, somebody has to lose. Stock is not a zero-sum game. If you buy a share, everybody can, if the company increases, everybody can gain in the share. But Forex is not like that. Forex, for somebody to gain, another person has to lose. So because of that, you have to be very careful. So everybody who is making money in Forex, somebody else is losing money. So that's why you have to know how to do the pips and how to do read all the charts, the candlesticks, and really understand when to go in, what news, what news. Like there was a man who made 1 billion from Forex. Do you know how he made it? One investor, he made £1 billion. When UK was going to leave EU, when Britain was going to leave EU, he he knew that the British pounds was going to crash. So he went to short the pound and say, okay, I'm going to buy it, and it's going to crash because I'm going to crash. There's something called short shorting. So what you do in shorting is that you will borrow, you borrow the pound and say you will return it. It's still like Forex because it was against the US dollar. But when the pound now crashed, he made 1 billion. That's, I think, one of the highest Forex deal somebody has made, $1 billion from selling Forex. But my point is that, Lisa, you need to understand it, you need to read it, you need to study it, and you don't need to rush it. And you need to do it small. If you know you can lose $5, do $5 and lose it, no problem. But don't go and put a big amount for something you don't understand. It will be like disastrous.
Okay, sir. Thank you, sir. Because I tried it, though not big money, and I lost too.
Oh,
So
you lost.
there's no problem.
Okay.
Yes, I
So
lost.
it's like what I said, prediction. It's a zero-sum game. Yes.
Yeah. But I don't know how I can get your WhatsApp line because I love that business so much. I love it. I want to get involved into it.
So what I will encourage you, sir, is you see how you lost. You didn't lose. That losing is
Yeah.
is your payment for studying. It's like you went to the school and you paid to learn. It's like you went to university, because if you had gone to the first university, you pay money. So that money you lost, take it as a payment. Ask yourself, why did you lose it? And what will you do not to lose it? So I can encourage you to go back once you have thoroughly studied all the reasons that you made the loss and knowing that you will not replicate it. But don't also go and put a lot of money again. Always start small. Don't begin to put money until you become profitable and you are sure that the model you are using is working and is proven.
Okay, sir.
I don't do
But
Forex. I don't do Forex. I don't know Forex. I know generally, but I don't do it because of it being a zero-sum game. That's why I don't do it. I don't like zero-sum game investments. I want the one that everybody will win. But it's not like it's wrong. People want to do it. It's up to them if they understand it. Just like I don't do Forex, I don't do crypto. But those who do it and understand it, it's up to them. Okay.
okay.
Please, we need to round up now. We've exceeded our time that I've given us. Okay. Then we can always catch up, find a way to catch up. Sorry about that. Okay, so please, thank you everyone. I'm sorry we took about 3 minutes extra, and you get as much information Hassan and James will get across to us. Thank you and wish you a great day.
Thank you, sir.